Welcome to Dollars and Cents with Freedman Financial, the home for financial advice in a language you can understand. Created by Marc Freedman of Freedman Financial, he and his team of certified financial planner professionals will discuss timely topics that help individuals and families make smart financial decisions. And now, get ready for this week's edition of Dollars and Cents with Freedman Financial.
Welcome back to another edition of Dollars and Cents with Freedman Financial. My name is Marc Freedman.
And I'm Marion Gilman.
And we're here to provide you with some financial advice in a language you can understand. And boy, do we have lots to talk about. This has been a pretty eventful couple of weeks.
It certainly has, always keeping us on our toes, which is a good thing, right?
That's for sure. It's hard to believe that, we're taping this, I think today's March 4th, right, Marion?
Right. That's right.
So we usually tape about a week ahead of time, but it'd be remiss for us not to recognize the fact that on Saturday of this week, a war was started, launched with
minor details.
A war was started, launched with America and Israel, launching attacks into Iran, and the war continues. As we tape, perhaps it's over by next week. I doubt it, but
you never know. There are some who say that could be very quick.
It could be. There is certainly the country has taken the lead. Both the country, the United States and Israel, have taken the lead. They've taken a lot of. They're on the offense, certainly for sure, and I think they're hitting their objectives.
They're going to be have control of the skies over Iran relatively quickly.
Right, and the reason that we share this with you is that generally, geopolitical events or even sometimes called a black swan, sometimes, which are things you don't expect, can sometimes rock the economic outlook of things. And it was kind of interesting over the first weekend. I mean, the war started on a Saturday.
Correct.
Saturday and Sunday, you got a lot of news, a lot of information, a lot of, coverage.
A lot of talk.
It was a lot of talk. And people began to speculate, how will the market open on Monday? And, even just talking with my own kids, they were worried, Dad, the market's going to plummet. The market's going to be terrible.
Well, my husband said to me before I left Monday morning, I hope you're ready.
Yeah, and I just walked in here on Monday not really concerned about it at all. I told my kids, and I think a few of us talked about this, I wasn't so concerned about how the market was going to open on Monday. It was really about how it was going to close on Monday.
Right.
Because anything can happen when you have 2 days of all of this uncertain information, some of it true, some of it speculative, some of it just guesses, and people trying to speculate on what the market will do and how it will react during challenging times.
Correct. But nothing can be done over the weekend. We can't, U.S. stocks trade on a schedule. So the market opens at 9:30 on Monday through Friday, typically, and closes at 4 o'clock. And that's it. That's when you can trade. That's when you see the price action. There are some markets where you can trade after hours and all, but that is for limited availability. So in general, you are going to see the responses during the course of a day on Monday. And remember, 9:30 to 4 o'clock doesn't sound like a long time, but in market speak, it is a very long time.
Yeah, but
a lot can happen.
But then you got to back up about 12 to 14 hours because before that, the Asian market's open. And everybody looks to see what are the Asian markets going to do because they're going to open first. And then you go to the European markets and how are they going to react and so forth and so on. And we heard about airport closures and all sorts of things that were happening. So how did the first day following the war in the market end? Basically, it was a nothing burger.
Right.
It was really, really flat. Now everyone's back to work. There's lots of news, lots of speculation.
Right.
Now there's press conferences. Everyone wants to provide their opinion because what was really interesting also on Saturday, the day of the war, it didn't matter what news station you turned to. Guess what? Everybody was reporting the same thing. They were reporting news.
For once.
They weren't reporting opinions.
There was actually news.
There was news. Everybody's reporting the same thing.
That's right.
But the further you get away from the onset of that action, the more place there is for all sorts of opinion. And now opinion starts to roll out. And speculation. It rolls out on Sunday night, Monday, and then Tuesday. All of a sudden, now there's all these reports that, what will happen with all of this oil, or the bottleneck that happens in the Strait of Hormuz, and what will happen with these partners now, the allies in the Arabian countries and all of that? What's going to happen there? What's going to happen at home?
What's going to happen to prices?
Right. And how is politics going to play into this whole thing?
Right.
And now everybody wants to offer an opinion. And guess what? On day 2, the market opened down 1,200 points. Now, is 1,200 points a lot?
No.
It all depends on how you look at it.
This is true.
It's dollars.
Sounds like a big number, doesn't it?
Right. Dollars versus percentages.
That's right.
So if the market was trading at 2,500 and the market dropped 1,200 points, whew, that's a big, big drop.
Huge. You just lost half your portfolio.
Right. But if the stock market or the Dow Jones Industrial Average is trading at, call it 49,000 or 50,000, and it drops 1,200 points, what's that, Marion?
Negligible.
1-2%.
Less than 2%. Yeah,
Yet, despite the fact that it dropped 1 or 2%, it led even our own clients to call the office and say, Marc, Marion, I know I wanted this money this week. I know I wanted you to send me some money this week. Don't do it. I'm a little worried. I don't want to sell into a bad or falling market. Yeah. And what our clients seem to forget, when they tell us, and when we've had conversations, that you are going to need money in a period or fixed period of time, at some point this year, next year, we are already pre-planning your portfolio so that as it gets close to that date, that money is no longer at risk.
It's available for you. So we always keep a certain percentage of money in bonds. But if we know that you're going to need, let's say it's $50,000 or $100,000, we're going to keep that on the sidelines or a little bit safer, sort of in a more conservative bond portfolio, so that when you call us and say, okay, I need the money now, and we're talking if you need it within 6 months or a year, I need that money now, we've got it ready for you. We're not selling, Microsoft when the tech market is down 10%. We're selling from a bond portfolio that's designed especially for the fact that you're going to need money.
Yeah, and let's also remember, the market opened, this day 2 of this war, of the market being open, War Tuesday, opened up down 1,200 points.
Yeah.
How did it end up?
It ended up down
I don't know.
Much less
It
than
was
that.
much less than that. I don't even know what the number was.
So what happened
easily
was
half of less than that, yeah.
Yes. So in the middle of the day or at some point, the president started speaking. And as soon as the president started speaking, the market turned around. I think it opened up, it closed down about 300 points.
Whatever it was.
Which is honestly negligible for the Dow.
What's even more unusual is the fact that when the president spoke, the market went up. Generally, that goes the other way. So there's a lot of factors that all play into why markets move up or down. You can't peg it on one thing or two things or even 9 things for that matter. There's a lot of reasons why different stocks move.
A lot of it is simply investor reaction. And you never know what that sentiment is going to be. As Marc said, a lot of times the president gets on, starts speaking, and the market goes down. This time it turns around and it goes up because they liked what he was saying. They, as in market participants, who are they? We don't even know. It's a conglomeration of individuals and market, in large institutions. So it's very difficult to actually pinpoint who is buying and who is selling for somebody like us or an average market person.
And just so you know, on Monday, what we did at Freedman Financial, all of our clients got a letter from us. And that letter offered perspectives, I'll call them rational perspectives, during what appeared to be a volatile moment in time.
Correct.
To share that out with them. Yeah. If you're a client of our office, you know that you got that letter. Right. Also, if you get our newsletter, you also saw that letter, though it came to you on Friday. And if you don't get our newsletter, and I know I'm fast forwarding here a little bit, you can get our newsletter by going to our website, freedmanfinancial.com. That's Freedman.
2 E's in a day.
And financial.com. You put in your name and your email address, and you'll get this newsletter. It's been coming to our clients and, frankly, 7,000 subscribers since March of 2009. Right. Now, back to what we were talking about.
Well, having a letter such as that, and it was relatively succinct with various viewpoints in there, so you can step back. We hope it allows the clients to sort of step back and take a broader perspective on what's going on and how that might or might not affect the stocks in their portfolio or the bonds in their portfolio, because not everything has an effect on your portfolio, or and particularly has a negative effect, significantly negative effect. And in this case, what we've seen is, the market is up today. So
yeah.
Again, it's somewhat surprising, but
and I think we have to put some things into context. The year 2023, 2024, 2025. If you were in a well-balanced portfolio, had some stock funds, bond funds, 60-40 split or so, in general, no guarantees here, but in general, you were in the low teens for performance each of those 3 years.
Which is amazing.
And if you were hoping for 20, 30, 40, 60%, you're nuts. That's not going to happen on a regular basis. And when we do planning projections for our clients, it's to produce somewhere between 6 and 8% over time. So we have way overshot our marks for the past 3 years. However, 2022 was a negative year, negative low teens. And that's because interest rates went up that year.
Correct.
Inflation was tough. But everybody seems to forget the bad years when you got a few good years. Well, what's really interesting, and I don't know what the market will be on the date this actually comes out, but as we sit here right now on the 4th of March, even with the volatility that's gone on with this war that's been going on for just a few days, the market is still positive for the year. It was only up a little bit anyways, but it's still positive for the year. The promise that I think I'm making to myself, the reality check that I'm making to myself and to our clients is, don't be surprised if the market drops 10% this year or more.
Wouldn't be surprising at all.
That's normal. Right.
We're
like in stereo.
Normal. There you go. We think alike.
We do.
Great minds.
Yeah, it is. It is normal to have that happen. Right. Even when we had COVID, when the market dropped some 35, 40% in a very, very quick period of time, it rebounded. It actually went off to a greater high at the end of the year. But markets go through volatile periods of time. They're going to go up. Everybody wants to talk about the good stuff. Nobody wants to talk about the bad stuff. What we try to do is remain rational during those emotional nuances.
That's right. And, again, we make sure we rebalance portfolios. The other thing that we realized particularly in 2008, 2009, we realized that a lot of our clients were no longer keeping an emergency fund, because the years between 2002 and 2008 were fantastic years for the most part. So nobody wanted to keep any money in cash at the time because cash was not paying much. Well, we got very serious about making sure that our clients still maintain their emergency fund even when the market is going up, which is a time period right now. So we're trying to be very diligent to be sure that our clients still have an emergency fund at the bank. I know you hate to give up any returns. On the other hand, it works out really well if the market's down and you need a new roof.
Absolutely. And it's a lesson that we've learned. And look,
Right.
65% of our clients are in some phase of their retirement, meaning that they're having to rely on the investments that they've accumulated to help supplement their spending needs. And
Correct.
We don't want to put our clients in a position of fear that if the market were to drop, that they wouldn't be able to draw upon their funds. We have segregated assets that they have with us that are readily accessible regardless of the volatility of the market. And that's very important. It's a commitment we make to our clients. But it's also the same commitment when we get a call from someone that says, hey, I've got a CD that's coming due. I want to buy a house in about a year. Can you buy me an investment that's doing better than what I can get at the bank? And our answer will be no. Absolutely. Could we? And run the risk? Sure.
Potentially.
But you need that money to buy your house or whatever that large purchase might be. We as a fiduciary, we as a certified financial planner and someone that places your interests first will not put ourselves and you in a position of potential risk so that you can't afford that larger item that you want to buy that's just a little bit down the road.
That's right. I mean, again, you might have $100,000. It could go to 120. It could also go to 80.
Right.
just as easily.
And folks, that's what we call financial advice in a language you can understand. That's going to do it for us this week. I want to remind you again, if now is the time for you to get serious about your financial planning and investment management needs, we hope you'll give us a call. 978-531-8108. That's 978-531-8108. Or visit us on the web, freedmanfinancial.com. That's Freedman.
2 E's in a D.
Financial.com. Go to the bottom of any page, put in your name, your email address, and you will get our free weekly newsletter every Friday. Lands in your inbox, 10:30 Eastern Standard Time. That's going to do it for us this week. We'll be back again next week with more dollars and cents and financial advice in a language you can understand. Have a great day, everyone.
Enjoy.
During today's episode of Dollars and Cents with Freedman Financial, your host may have discussed specific financial planning and investment ideas that are for general information only and not intended to provide specific advice or recommendations. Please remember that investing involves risk and may include loss of principal. Always consult a certified financial planner professional, qualified attorney, or tax advisor prior to investing to determine what is appropriate for you. Securities and advisory services offered through LPL Financial, a registered investment advisor, member FINRA, SIPC.